joining us to talk energy. Scott, happy Monday. Thanks for joining us here. Let's begin with the jobs data Friday. A bit lower than expected. Non-farm payrolls came in 130,000, but not low enough to spark demand concerns. And with optimism related to U.S.-China trade talks coming in October, well, you can see why the crude's been bid and pointed north.
Yeah, absolutely. I think if there was going to be a surprise number that was going to affect the marketplace, it would have had to been on the other side, Ben. You know, a really hot number, 250 or something like that. So the lower number that came in, really didn't affect the market too much, and just does, it really does help crude where it is right now.
Scott, I heard and read a recent Reuters article last week. It said that oil producers and their suppliers are cutting budgets, staffs, and production goals amid a growing consensus of forecasts that oil and gas prices are going to stay low for several years. They went on to say that the U.S. has 904 working rig counts, down 14% from a year ago. Should we be concerned about the health and well-being of the U.S. shale producers if prices remain at current levels for a prolonged period of time?
I think we do need to, and all you have to do is look to the number of bankruptcies that we've seen this year, which so far this year have equaled what we've seen all of last year. So, there is some concern here that if crude stays in this price range here, many of these producers are not going to be able to stay in business or are going to be in trouble. Now, one thing that you really have to look into when we focus on rig count, which came out last Friday, Ben, and we saw that, where we see that number change all the time here. If you compare the rig count now to where it was 5 years ago in 2014, it's much different. So rig count is almost cut in half. However, the efficiency is so much higher. So there's 50% less rigs out there right now producing 40% more oil than they were 5 years ago.
Noted. So that's an important fact when we're talking about those rig count levels. And, one of the things that a lot of traders were looking for was impact from the storm. Sometimes it takes a couple weeks for the inventories and some of the demand to return to normal, but for the most part it seemed like with the trajectory of this storm, we dodged a bullet here, Scott, and although it did seem to lift the price a little bit, for the most part, again, it could have been a lot worse.
It could have been a lot worse, for a lot of reasons, but just in the oil space itself, absolutely dodged a bullet here, and temporarily now we're seeing some pressure on the upside here. I think, like you had mentioned earlier, we're coming up to a very, very big resistance area here, and I find it very, very difficult to see oil really breaking through this 57 and a half level at all.
Yeah, we've got a chart up here right now showing that was a top throughout the month of August. We just retested it recently, beginning of September. 57.76 was a high. We were talking a little bit about inventories. Last week we saw a decline, not as much of a large draw as we saw in the week prior, but still crude oil inventories decreased by 4.7, I think it was, 4.8 million barrels with 423 million barrels in storage. U.S. crude oil inventories are at a 5-year average for this time of year. Holding the 5-year average sure puts to bed some of the demand concerns that we've been hearing about and fearing, it would seem, Scott.
No doubt about it, but I think we have to separate demand here in the U.S. versus demand globally. And it's still here in the U.S., right? I mean, we're producing at record levels and our demand is still at record levels, but we're not seeing that globally. And I think that's the concern, is that starts waning and starts shifting into the U.S.
So, Scott, for currencies and treasuries, well, and indices for that matter, we have economic data, we have central bank activity on the calendar for the next 2 weeks, but how much of this do you think is going to impact crude? I mean, we're really focused on U.S.-China trade, it seems like. I mean, obviously, if we get some, really strong retail sales numbers, in theory, that could impact crude. You would think that that'd be a sign that the consumer is really strong still. But the CPI and the PPI, it seems like it's more focused or directed towards some of the financial products.
Yeah, it really does impact more of the financial products. And we're going to get those retail sales numbers later in the week. But like you said, the world, not just the U.S., the world is focused on the ECB and then obviously the U.S. Fed next week. And it could have a big impact on crude, right? I mean, it depending on how dovish especially our U.S. Fed is, that could really have an impact. Now, if they, everyone's expecting they're going to cut by a quarter point, so that's pretty much built in. It is built in already. But if they take a stance that, okay, we're cutting this quarter, but you know, maybe it's not so bad moving forward, and we don't have to cut moving forward. That will really impact crude.
Scott, I want to get your thoughts on the one of the top stories that's impacting crude, and probably one of the top stories that is going to be a big discussion this week. A focal point is the changing of the Khalid Al-Falih leaving, and the royal family putting in a new energy minister there. They said it shouldn't impact policy. What do you think?
Well, everyone, or when I say everyone, I'm not sure who everyone is, but at least the analysts and people covering this say that, you know, this is a very bullish thing for crude here, because the new minister that's coming in is very proactive and really wants to keep those cuts in place, extend those cuts that we've seen, and even maybe put a little pressure immediately on Russia, who I think is producing a little bit more than they're supposed to right now. So you know, in terms of where the demand should be, and in terms of supply especially, that could be bullish for crude. Again, overall though, I think, you know, once he's settled in, and once the lay of the land takes hold here, I think it's going to be back to, okay, what is the global demand? And we know that he wants to keep these cuts in place, so I think that's already built into the marketplace.
All right, Scott, we'll keep an eye on that 57.50, that 58 level, and above that, we're talking 60 to the upside. Traders. That's Scott Bauer joining us. He's the CEO of Prosper Trading Academy. Scott, appreciate you taking the time to talk energies with us this morning.